All right, YouTube family, what's good? It's your boy Robert Williams here, just bringing another video. Today we're going to talk about taking a look at some Fibonacci retracements and wanting to show how crazy Fibonacci retracements can be on calling out spots in the future where there will be, and I promise you, where there will be areas of support and resistance consolidation or something of that nature. So as you guys know, I like to trade with Thinkorswim, and here we are on my Thinkorswim platform. What we're looking at right now is just a daily chart for ABBV. And what we're going to do, though, is we're going to take this and utilize the on-demand feature and go back in time and take a look at some stocks and then push out to the future to see if those retracements came to play. So I just clicked on the on-demand button in the top right of your Thinkorswim platform. This is great for backtesting. This is why I love it. And right now we're in July 2014, and we're looking at my core watch list. But let's go, because you guys know, if I'm going to share a video, I want to go and just experience it with you. So let's go and pick a different watch list of some different stocks. And so I'm going to go to, just my personal, I like a personal list of some other stuff. I promise you, I probably haven't looked at these in so long. As you can see, I haven't looked at these in a bit. I don't even know what these are. But let's take a look at some stocks. We're not going to look at ABBV. We're not going to look at our popular stocks where we kind of know what happened, right? Let's go ahead and let's take a look at some stocks here. And what we're looking at right now is Autodesk. I promise you, I've never traded Autodesk. Now, the great thing about Fibonacci's, like if you don't know about it, read up on it. Plenty of videos about Fibonacci's. But the retracements not only can tell you where things will retrace to, but what I love it is also for the extensions to give you some idea of price target. So if we're here in July of 2014, and right now on the map, I'm looking at March of 2013, we can see it had a nice uptrend. But what I want to first do is take a look at the Fibonacci retracements, and I want to take it from this high to this low. So let's go ahead and click that in from this high to this low. And we can see here where, of course, you've had some retracement levels. And obviously, on the way back up to the previous high from when it did its pullback, you're trying to get an idea of where the stock may settle in at. Typically, it's popular that it settles in. Sometimes it pivots at the 50% line, definitely the 6.18, and then booming up to back to like all-time highs, which pretty much is what the 100% recovery. But what I also like to identify it for is, let's say when it gets past the 100%, where will it go next? Where will it go next? And that will be our 161.8% line, or the 1.618, or the 2.618. All right. So this is obviously a retracement of 161% and 261%. But what we're looking at here is if we pulled this large downtrend move here, where it was in a bullish phase for a couple of months, and it started to work its way back, as we can see, it went up to the 100% line and dabbled around a little bit there, pulled back to the 78.6, and then it went on a charge, breaking through the all-time highs. And what did it do? Consolidated around that 168, 1.618 line. Hit there, pulled back from there, hit the trend line, then busted through. Then where did it go next? The 261. Got into the zone, pulled back, but then of course eventually popped up there, pierced through it on something, I don't know, was this earnings in a sense, fell back through, came down, hit the 161 as a support, and then pushed back up to the 2618. Some amazing things here that this chart is showing us. So this is here putting it in just to give you an idea of what it can do. What I want to do though is look at the future. So let's go ahead and I'm going to move this Fibonacci retracement. I'm going to move it up to this pullback. And I'm not going to use this high because that's a little bit of an anomaly with earnings and everything, but I'm going to use this top and this bottom. And I want to see where it extends to. That's what I want to take a look at the Fibonacci's for, is to see what it extends to. All right, because technically, based on the chart, it should extend up to the 62.51 price range, and it should also extend up to the $73 potentially. And you know what? Let's get off the daily. Let's just get off the daily and let's take it to a weekly, so we can have less, so we can have less candlesticks to look at. But let's pop out a year from now. and see what this chart looks like and see if it hits those targets. So now we're going to go to July 17th, 2015. And wow, look at that there. Went to the 6161. Let's go back here. I meant to do something for you guys. I meant to do something. Let's go back here to the 18th. I wanted to actually draw in something real quick. I wanted to draw the arrow to show you where we're at. So here we are right here, okay? We're right here at this arrow. Remember this arrow that I just put in there just now. So let's go back to the future and let's go 2015. And boom, look at that. All right, here we are. This is where we just came from a year ago. So within the year, right? So we drew the retracement line. And my thing was, let's see if it hits that 161 line. Well, here we were. And let's see what it did a year out. Obviously, it went down. It hit the 38%. Popped back up, broke through the 100 again and charged up. And where did it go to? Oh my, the 161. Pulled back, broke through the 100, hit the 78, and then oh my, it went back to the 161. Man, these Fibonacci retracements that you can use as price targets for the future is crazy. And then obviously we see some pullback, some massive pullback here on Autodesk, and it hit the 50% line. So let's do this. Let's draw on another arrow to say, all right, this is where we were right here. Let's just see what it does another year out from here. And then we'll go take a look at another stock. And all right, so here we are. We were here. So this is the first mark. Then we went a whole year and we're right here. And obviously it continued with this downtrend. What is this in 2015? I mean, honestly, I wasn't trading at this time, so I don't know what the market was doing, but obviously it pulled back, hit the lows again, right? Remember, lows and pivot points are not actual numbers, but more so zones. This is a zone. And then it charges up in 1, 2, 3, 4, 5 weeks, a month and a week. And it gets right back up to that 161 line. And again, this is just a zone area that it hits. Now, let's be honest. If you didn't have Fibonacci retracements and you just saw this chart and you were trading this in this time and you were like, oh, it's charging back up. Well, where could it go? Oh, all previous all-time highs. Okay, yes. Yes. But we already know that the previous all-time highs is something significant from back here as well on this Fibonacci retracement. And the thing is, let's move it. Let's see if the Fibonacci retracement has any significance in other areas of pullback. Let's see here. So let's look at this one. Does anything come into play here? A little bit more with the 161.8 on this pullback. Look at the significance there. It's the same area, and the 161 is significant there if you measure that pullback. Let's go to this one. Obviously, this is not the best, most ideal one because we're already at the top, but we were looking at first at the pullback from back here to say, okay, if it gets past this zone, where could it go next? And it can go from 55 to 61, and that's exactly what it did in about a month after breaking through it. All right, so let's take another look at another stock because I'm gonna have to head out and get my son from jiu-jitsu. So let's go back to 2014. Let's take a look at another stock. Again, one I haven't traded. What's APC? It's got some numbers on it. APC. Okay, let's take a look at that there. We got some good movement here on this weekly chart. Let's throw in a Fibonacci. I'm gonna start to the far left and let's just see what becomes relevant with putting in a Fibonacci here. All right, so we're at 2010. This goes all the way, and then obviously we're here in 2014. This area comes into play from this super old Fibonacci retracement. Likely, you may not be using that one unless you've been super long-term trader in a sense. But let's take it to this. Let's take it to this one right here and see how that. Let's see how that came into play. Oh wow, look at that. So this pullback. Another, again, downtrend moment here. Then it revs back up, breaks above the 100. Again, these retracements are significant. The 3.8, the 61.8. These are significant as it's moving its way up. But obviously, we can see when it pulls back, it's pulling back in the zones of the fib lines, and then it hits a target of the 161. How interesting that came into play. Because the thing is, you have to consider this when you're looking at this pullback. You may be right in here. Right? How can I show this? You're right in here and you don't see that future. And you're wondering, man, all right, it should get back here if everything is going good. But then after it gets back there, where will it go? Oh my gosh, it's back there. Now, where is it going to go? Well, the retracement is going to give you that. And the extension, the 161 says, okay, if it breaks above this, the next area, the next zone that it could be stopping at is $108. And if you just play along with it, or you pull back, you may have gotten out at that point, but it's still in play. And then, of course, it definitely eventually gets there. That's a long time, though. I'm not going to front. That's a long time. So you wouldn't ideally use that one. You wouldn't ideally use that one. You would take that Fibonacci. You look at this pullback. Let's take a look at this one. Let's go to, oh gosh, Robert, can you get it right? Can you get it right, dude? There you go. Let's pull this in here. Oh man, look at that. Look at that line. Look how crazy that is. You pull this back and it comes into play, even with this pullback. So again, let's say you're here. Nope, you're not there, because that's definitely not what I wanted. What the heck did I just do to this chart? Why did it do that to me? Oh, it's going to stay like that too, huh? That's not what I meant to do, fellas. All right, I meant to do this. All right, so let's say you're right here and you're wondering, how's it going to move back? Well, let's continue to move forward. And you're like, okay, oh wow, it's hit the, it's pretty much reclaimed its target. All right, where could it go from here? And it goes up to our target point, right there in that zone, in that area. And then of course, it eventually hits it. All right, so now let's take a look. We don't quite have a pullback zone here for this chart. So let's go ahead and let's continue to use this pullback and just see what happens in the future. So let's hurry up and go 1 year out, and then we'll take a look at 2 years out. So, dang it, I forgot to do the arrow. All right, so here's where we were. I remember where we were, right here. So we can see that on this stock, whatever it is, Anadark, that on the pullback, it came up, it did its thing, and it pretty much stopped there, right at that 161 line. And then it gave up the ghost and pulled all the way back. It gave up the ghost and pulled all the way back. All right, so let's do this. Let's put in this here as our arrow. Let's adjust our Fibonacci lines. Let's go out 1 more year. Let's see if this pulls back and goes back up somewhere. And I'm gonna adjust the fib line. And I'm gonna put it, and here's our bottom. And I'm gonna take this, I'm gonna make this the top. It's practically the same thing, you guys, okay? It's practically the same thing. You know, I'll go ahead and put it here for the purposes here, but then let's go ahead and let's look at a year out and let's see what happens. 2016. All right, so Anadark just wasn't it. And it continued to pull back even further. But here, let me show you something real cool, and then I gotta go. Let me show you something really cool, but I have to go. I have to go. Actually, I'm running late already. You can use Fibonacci retracements on the downside to see where it could go. So it pulls back, it comes up to try and retest and get back to its highs, but it doesn't work. Well, once it breaks the low of where it's at, that's where you start your retracement. And now we're just going to see how far it retraces on the bottom side. And we go up, and if we put this in and we're right here when we're drawing in this chart because it broke through, where would it go? The 161? Well, that was $58 and $58.51. Well, it hit it on that long one, came back, or it pretty much dropped down to that gap down on that week. And then it comes back up, then it pulls back down, hits it again, comes up to the low, which became the new resistance, and then it hit it again. And look, it got there. It was there for like 4 weeks. Look at that, 1, 2, 3, 4 weeks. And then it broke down even further. Must have been all bad. And then here we are. It got to the 261, and then it started to make its charge. So not only can you use the Fibonacci's on the side to look at the extensions of targets on the upside, but you can see and say, hey man, where will this possibly fall? And then you can be able to gauge in your trading how to do that as well. So we'll take a look at more of these stocks later on, ladies and gentlemen. I just wanted to share this with you real quick, but I'll be back with another, a couple more stocks in just a bit. So stay with me, rock with me. Until next time, continue to think, live, and be unstoppable. All right, now, peace out, y'all.